So thanks again. So Henry, like I said, will be going through the process. He'll also be discussing some proposed amendments to the enterprise risk management policy and regulations. Once again, we appreciate you joining today's session, and we hope you'll share information with others on these office hours. So with that, Henry, I'll turn it over to you to get going. Thanks.
Thank you, Jackson. So we'll walk through the process, the timeline, and sort of the framework for the policy and the amendments, and what are some of the items that have been discussed or proposed as options for board consideration. And just to remind folks, our enterprise risk management policy is a framework that integrates an energy portfolio risk management policy, providing guidance on how we purchase electricity in the wholesale markets, a retail rates policy, putting guidelines around how we set rates and what kinds of rates are offered to customers, and our financial reserves policy, which governs and clarifies how we accrue reserves, what are our reserve targets, and how can those be used or made available to the members. So we are a public power agency, and we manage these public funds on behalf of our 60 or 70 odd member cities, towns, and counties. Within the framework, there's also the energy portfolio risk management regulations, and this is where we'll get into the more detailed operational procedures for power resource activities, hedging, trading power, rate setting, cost allocation, things like that. And I'll also just note up front, we're sort of at a early mid stage in this process. All of this material is just draft and for discussion purposes. There's been discussion at the Risk Management Committee. We had initial drafts circulated earlier this month on the 17th of July, and there was a good deliberation at the Risk Management Committee. Any proposed amendments are, our portfolio manager, Ascend Analytics, has contributed to the proposed amendments, and the amendments are under review by our load serving entity and portfolio manager, the load serving entity being Calpine. So seeking input and guidance from those key partners. Today is July 25th. This is an office hour. This is the educational forum to engage with members and board to tee up some of these concepts and provide a, education and discussion around this. And we'll put it on our YouTube channel and definitely make sure it's available to all board members and interested parties. Next week, the board is going to meet, and there may be some preliminary priority changes considered and acted on, which we'll discuss. And these are changes that have been developed in close collaboration with our partners at Calpine, just to clarify a couple of details that we can get into. Next month in August, we're looking at spending more time in the Risk Management Committee, getting into a detailed review of the regulations and the procedures on these power resource functions before an August and or September board consideration of final changes to policies at this point in time. Policy shouldn't necessarily be changed too frequently, but the board has the prerogative to make adjustments as needed. And then when we get to the regulations, those are, it's a living document as CPCNH evolves, as we learn over time, as we modify our procedures, those regulations can be updated accordingly. So it's not a once and done change. These documents can be modified over time. So we'll talk about the policy, and then we'll talk about the regulations. And there's just a few sort of high-level categories of proposed amendments, and I'll just walk through several of those. So just up front, like kind of clarifying the document structure and introduction. So there's been, we've lumped together the risk, rates, and reserve policies into a singular document, but nowhere on the title of that document did it say, until now, enterprise risk management, but really the enterprise risk management framework or policy encompasses risk, rates, and reserves, as well as the regulations. So that's just really a clarifying point. And also including some better clarification in the introduction, referencing our joint powers agreement, our foundational document and contract among all of the members, and the requirements therein for developing an ERM policy. And then we also discuss and just highlight right up front, what are the aspects of this policy that are not subject to unilateral change by the board? So certain aspects of the policy are developed in coordination with some of our partners, our load serving entity, and there are contract requirements that require approval for certain amendments. Okay, modifying reserve targets. This is substantive, but also fairly straightforward. So CPCNH has a minimum reserve target of accrued net margin to cover 60 days of operating costs and a actual reserve target of accrued net margin to cover 120 days of cost. Expect many of us are familiar with these. And the update would be modifying the time frame in which we anticipate reaching those targets, moving out to 2027 for the 60-day minimum target, and then 2029 for the 120-day actual target. These are based upon our current financial models and forecasts and the recent rate setting and some assumptions about our reserve build over the coming 1 to 2 to 3 years. Another important clarification that is being proposed is just this look at, we all understand that reserves are accrued revenues. So accrual accounting by flow month, which is different than cash, of course. In a given month, we may accrue a certain amount of revenue, but the customers may not pay their bills for 30 or 45 or 60 days thereafter. So these are accrual-based targets, but the policy amendment proposes that we are also tracking and reporting on a regular basis cash reserves. So there are two purposes for these two categories. Accrual is for our policy targets, and cash is for our short-term financial planning, liquidity management, and then looking at counterparty credit evaluations. So just making that clear distinction between cash and accrual. I mentioned amendments. There are certain sections that require LSE agreement or load serving entity agreement to modify. So just those are flagged up front, again, for clarity. So position limits or hedge ratios. We can't lower the floor of our hedged positions without coordinating with our load serving entity. We can't take on new kinds of product types without coordinating with them as well. And some sort of standard stuff, emergency default rate adjustment authority requires discussion to adjust that, and then reducing reserve target levels again would have to be done in concert with the load serving entity. These are all pre-existing, they're not new. It's really bringing them to the fore of the document so board members and readers of the policy have clarity. Rate structure types. So again, this is more clarification, but certainly could be considered substantive. So the prior iteration of the policy outlined sort of two either or types of rates that could be offered, one being a discount to utility tariff and one being a fixed price cost of service rate. And in rereading and reviewing the policies, it really became clear that this doesn't really make sense, regardless of whether a rate is a discount to a utility rate or a fixed price cost of service rate. It is a volumetric rate, and either of those rates will and must be cost of service rates. So that's, again, it's a clarification, just having a couple of years of operations and practice under our belt, sort of streamlining that. And there's some additional discussion. There's certain rates that we've been unable to offer, net metering rates, time of use rates. So just some discussion on the limitation of those based on the utility or regulatory context that, again, we hope to make progress on. So this is something that's been requested by a number of members, and I know Bruce Tucker's on the line, and I hope Bruce will appreciate this, but there's been just sort of some catches at the rate setting timeline because there is this requirement that all members elect their rates in advance of or during board meetings at which rates are adopted. So that provision is struck to provide greater flexibility to members. So instead of deciding, before the board meeting adjourns, they want to take the evening, convene with their committee, maybe it's a Thursday into a Friday, there's greater flexibility to let the members elect their rates without having to do so, during the meeting that those rates are set. And then there's some clarification of content pricing for opt-up products, just, stating that Granite Plus, Clean 50, Clean 100 will be priced according to at minimum, the prevailing cost of additional RECs above renewable portfolio standard levels. Okay, roles and responsibilities. Some more substantive changes coming here, but I guess to start with the non-substantive, this is really just to organize in a single place all of the roles and responsibilities of the chair, the CEO, the board, the committees, the personnel. So it's very clear in just a couple of pages what those roles are, and it's sort of a reference document for folks. And then inserting or pulling over from the regulations into the policy. Similarly, the roles of our portfolio manager, front, middle, and back office, data services manager, the load serving entity. So just sort of in one, you can run down the list and see who's responsible for what all in one place. Additionally, we have a proposal to add a role of a risk officer that the board would or could appoint. And this is a suggestion in part based upon sort of the leadership transition and perhaps interim nature of current structure while we're looking at bringing on additional staff. But this individual could be a qualified CEO, it could be a staff person, it could be a contracted entity or person. But really the purpose of this is just to clarify there needs to be a individual, whether it's one of these entities, who is responsible for implementing the policy and for communicating risk management issues to the board. And some of those major tasks are rate recommendations, emergency rate adjustments, somebody being responsible to ensure that the right committees, risk, finance, and the board are all receiving adequate financial forecasts and risk metrics as are required by policy, and then submitting notices to our suppliers or load serving entity as pursuant to certain contract requirements. So just sort of the provision to call attention to and clarify the importance of having responsibility in an individual qualified in risk management. And let's see, policy compliance. Again, this is just moving information from our regulations into the policy for greater clarity. The regulations are sort of they sit on a shelf and they don't get read much often by in the weeds folks. But there are requirements in there for policy compliance attestation. So we have an attestation form that all involved persons must attest to, must sign. And I'll just pull what that is. So this is just this box here is the language. Officers, directors, member reps, staff, contractors who are engaged in risk management shall annually sign a statement attesting that they have read the regulations and policy, that they understand them, they will comply with them, and they understand that violations would be reported to the appropriate parties, and that they would be subject to disciplinary action. And so that's making that more clear in the policy. Changing the term exceptions to violations is a substantive change. And there's some further clarity on how violations are reported. Let's see. Yeah, some other adjustments. So we've been using gross margin at risk as a sort of primary risk metric. And just, again, adjusting that to net margin at risk is the recommendation as sort of the most important metric for CPCNH to be monitoring and measuring and responding to. Gross margin sort of being before some of our operating expenses, our margins before certain operating expenses, whereas net margin is the net margin, the actual margin. And then adding governance risk and risk of politicization of power resources. One way to think about this is sort of simply, being aware of wanting to be careful of, there's a great PPA over here in my opportunity in my cousin's 10 acres, something of that nature. But just adding that into our categories of risks that are defined and the committee and the board are aware of. And then I'm jumping into the regulations a little bit, but it sort of flows from the attestation. So in order to sign that attestation form, we've worked really hard to ensure high quality trainings and materials are available to the full board and all of the risk management committee. So we've done over 10 hours of training from our portfolio manager and other partners, looking at how do the power markets work, how are we doing load forecasts and looking out at forward price curves, how are we hedging our portfolio, what kind of uncertainty do we take into account, how are we looking at risk metrics and reporting that, and all of the other details, cash flow model and our cost of service analysis. How do we build up a cost of service analysis to accurately price rates to the best of our ability and charge customers for the costs incurred by us to serve them? And then the forecasting of our reserves and the probabilistic forecasting. So looking out at different potential future scenarios of our financial status. So part of what the regulations do is they attempt to ensure that the board, the risk management committee, and personnel all have access to high quality and adequate training materials. And so those are stored in folders, the recordings, those materials. And our portfolio manager, middle office, will deliver a competency test to the risk management committee, which is really, it may sound a little more than what it is, but it, maybe a 15-question multiple choice review of the policy that's really meant to further the educational process for those involved. So I'll move into the regulations. The regulations were first written and their sort of current status is largely reflective of prior to launch. So they were written before CPCNH launched operations. They were largely meant as a tutorial or educational materials for the risk management committee to familiarize everybody with all of these concepts. And they were written before CPCNH had any operational experience or data. So we didn't have, procedures. We didn't have experience or data under our belts at that time. So now is a great time to provide an update to those. And really the shift is from that pre-launch educational framework to we've got 2 years of operations under our belt, and we're really going to detail explicitly the procedures for power resources. So it condenses the educational material and then focuses on procedures. And much of this remains in draft form, but we have a good framework and we know what power resource procedures need to be detailed. So we have just clear roadmaps and understanding of who's doing what and what are all the requirements. So some of the amendments, these may be discussed at the coming board meeting this week or next week. These have been developed in collaboration with the load serving entity. And yeah, they're in everybody's interest. And really the purpose is to improve the quality, ensure high quality service and power resource functionality within CPCNH. They're relevant to 3 procedures or sections. One would be working to maximize the accuracy of our forward energy market pricing assumptions. And that would be done by coordinating our portfolio manager, Ascend Analytics, and our load serving entity, Calpine, who are both constantly monitoring power markets and bringing that together to sort of ensure we have the best of both worlds and understanding of what is the outlook in the power market. And we're utilizing all of those resources in coordination. Number 2 would be the ensuring that we use complete cost assumptions and rate setting. So similarly, just firming up, these are the components of the electric portfolio costs that we will assess when conducting rate setting to ensure, rates are set with complete information. So firming that up. And then the third is relative to long-term power purchase agreements. So just ensuring that when we are looking at maybe a power purchase agreement with a generator, power plant, what have you, that there's a process outlined in that to ensure we are assessing how does that contract with the generator impact the way we're calculating hedge ratios or forecasting our hedge ratios. So all good improvements here. And Yeah, these may be under consideration by the board next week. Typically, the CEO or the board chair, after consulting with the risk management committee, has the authority to amend regulations. These ones, because they've been developed in partnership with Calpine and will put certain restrictions on future changes to these provisions where we would again want to coordinate with the LSE, these would be adopted by board approval. And then this slide is just to sort of preview more than anything what I mean when I talk about procedures. So there are categories of procedures, transactions, what kind of, power transactions are we entering into, load forecasting procedures, rate setting procedures, cost allocation reporting. But I just have an example here where we've been doing this for a while and we've had good procedures on hedging. And what the regulations will do will just make that explicit and say who is responsible for what at what time frame. So in the example of hedging, we have a front office, our colleagues at Ascend Analytics, who are monitoring the power market and reporting on our open position, how much of our, portfolio is fixed in hedges, maybe 80%, how much is open, what are our open positions that are subject to the real-time or day-ahead market prices. So they're monitoring the open positions. These may change as, loads go up and down. And they're also monitoring risk metrics. So then the front office provides a recommendation, a hedge recommendation to the risk management committee in consultation with the middle office, who's sort of independent verification of this sort of active trading entity. And the risk management committee will deliberate that, maybe modify it, and then approve or disapprove the hedge, after which point the front office will go and issue a solicitation where various wholesale counterparties will bid. We'll try to induce price competition and then select usually the lowest cost bidder for that transaction, so long as it's within the boundaries that have been approved by the risk management committee. Then the front office will execute that transaction. There's clear documentation requirements where it's all very carefully documented and maintained and sort of rolled into our tools and systems, our load forecast model. And then there's, billing and settlement on the other end. And then finally, I guess, accounting allocations. So accounting for and dividing up that hedge or purchase across the different community power aggregations. So this is just one example of a procedure, and what will be built out are clear procedures for load forecasting, clear procedures for rate setting. So we know, okay, the cost of service analysis is going to be done X weeks in advance of a risk committee meeting. It'll be delivered to the risk committee at this point in time. We'll have a joint risk finance committee meeting. They'll deliberate. A recommendation will go to a board. And that's all sort of laid out explicitly within the regulations. And again, available for review and refinement by the committee, the chair, the CEO, what have you, as we need to modify as we move forward. And then similarly, cost allocation reporting. We've been doing a lot of work on revamp of our cost allocation reports, and we want to detail the procedures for that as well. And then possibly other power resources functions. So this is, again, sort of a preview of some of that. And when we get to the August 21st Risk Management Committee meeting, I think we'll have good, we'll do a little more of a deeper dive into those regulations. And we'll make sure the committee has all of that material about a week in advance, and we can, have a thorough review at that point in time before potentially August or September board action to finalize some of these recommendations. So with that, happy to do any Q&A.
Yeah, thank you, Henry. At this point in time, I'm not seeing anything in the chat. Folks, feel free to unmute or raise your hand if you have any questions or discussion items to bring up at this point, or you can certainly type in the chat as well, and I'll be monitoring it.
No questions at all.
Means you must have done a stellar job, Henry.
That's what I will infer.
I'll make a comment if that's okay.
Great.
Yes, you did do a nice job, Henry. Thank you. And I think what this kind of shows and lays out that is that there are a lot of updates that we want to make across both policies and regulations, and that we're going to take them step by step, so that the board isn't overwhelmed and actually has a chance to read through the materials before a board meeting that requires a vote. And so yes, the first step are some regulations that we'll be seeing in this upcoming board meeting that are, as Henry stated it, it's good for us and our partners. And they don't seem very controversial because it's really outlining procedures. So excited to kind of get that one behind us so that we can start talking about the more substantive changes and issues that are interesting to all the communities. And I don't know if you mentioned like refresh policy, Henry, but that's another one that we hope to have some good discussion on at the board level at some point.
Yeah, that's a key point. I agree that's an important policy for us to discuss.
And if there's other policy items that anybody here has thought about, or high level, things that we should be thinking about, yeah, so don't hesitate to bring them up, and we'll figure out how they fit in and where they fit in.
Yeah, thanks, Kim. That's really helpful. Appreciate that added commentary on this. I do see a note from Paul in the chat just saying it's a lot to consume in one sitting. Totally understand that, Paul. And so will the slide deck be available? I think we can certainly make the slide deck available. As I mentioned at the start and put in chat as well, we do record all these sessions so you can review them again online through our office hours webpage. So that's another option, but happy to PDF the slides and distribute those also.
Right. And this isn't the first time we're talking about it. I mean, this is only the first time we're talking about it. Definitely not the last time.
Correct. Yeah, this hasn't gotten attention really outside of the risk management committee setting. Well, I'll give folks maybe another 30 seconds, do a last call for questions and comments.
Hearing none?
Yeah, hearing none. Everyone have a great weekend. Thanks again for joining this session, and we hope to see you next time.